Hi, everyone. I hope you can hear me. Not sure, but thumbs up, I guess, if you can. I'd just like to welcome everyone to Investing 101. My name is Niki. I'm one of the co-chairs of the Young Professional Committee, alongside Yvonne Lau, who will be the moderator, and Laura Chan and Pete. I really can't see who's on, so they might be here. They'll wave if they are. I want to say thank you so much for joining us tonight. At the Canadian Chambers, we're really, and the YPs, we really want to make sure that we do events for you. So if there's any time that there's a specific event that you want, please reach out to me or the other co-chairs. We're happy to listen. And at any time you want to help out with events, please let us know. All the help is welcome. I'll just pass it on to the moderator, Yvonne, and sit back, relax, and learn something about investing. Enjoy.
Hi, everyone. Thanks so much, Nikki, for the very energetic introduction. We're super excited tonight because, speaking to a lot of our friends and peers, etc., it seems like everyone really wants to get into retail investing. So we have three awesome speakers here tonight, who I'm just going to introduce shortly. But first of all, please remember there will be an open Q&A at near to the end of the session. So please, put your questions in the chat box, and the speakers will get to you. Now I'd like to introduce the speakers. If William, Mikaal, and Jackie, you could give a brief bio about yourself and what you do.
Thank you, Yvonne. Hi, everyone. My name is William. I work for CFA Institute. I'm an in-house management consultant, and so I do a lot of consultancy around our different markets and project management.
My name is Mikaal Abdulla. I am currently the Senior Vice President for International at SoFi. By way of background, I spent 10 years at E-Trade. Then in 2012, made a decision to start my own fintech company with a hypothesis that a mobile-only investing service would be appealing to sort of next generation investors. And then around this time last year, my startup, 8 Securities, was acquired by SoFi, where I am today. Thank you.
Hi, everyone. I'm Jackie Jadrosich. I'm currently the financial controller at Diginex Limited. Diginex Limited is a digital asset financial services and advisory firm. At Diginex, I lead the day-to-day financial operations and also the reporting and analysis. And just a bit more about Diginex. So Diginex is publicly listed on NASDAQ, and we own the exchange Equos, which is operated out of Singapore, and multiple other products that feed into our digital asset ecosystem.
Great, thank you so much, speakers. And I guess tonight, to start off, I'd really like to chat with William first, because you were probably in our shoes not too long ago. So William, could you tell us a little bit about, what made you start investing and some of the biggest challenges and lessons you've learned over your investment journey?
Yes, of course. Actually, my story, Yvonne, is quite simple. I started investing when I started to have savings. For most of my 20s, I had no savings at all. My mother is a huge spender, and so I followed her footsteps. And when she always told me more spending is good. So I started having savings in my late 20s, and I look at my HSBC bank account every month and see my 0.1 Hong Kong dollar of credit interest. I thought it's actually absolutely insulting, and I need to do something, everything in my power actually, to get the money out of that account and put it somewhere else. So I opened a stock brokerage account and started investing in a couple of stocks, do some trading. Then I realized, actually, I'm doing the single biggest mistake most investors are making, which is to not have a plan. I'm a management consultant and project manager by training, and I work for CFA Institute, which is the world's largest association of investment professionals, and I was not having any plan at all. So failing to plan is planning to fail, as we say in project management. So I thought I really need to have a plan and treat myself like a business. So I am the CEO of my life as a business, which is just a struggle, by the way. But if I am a business, then I have objectives, which is to retire one day. I have my revenues, which is my salary and others. I have my expenses, which is going out. And I have my risk, and I have my values, my personal values. So from that, then I can make myself a savings plan and an investment plan. And in my investment plan, I put some percentages of what do I want to allocate in my risky stuff that I am okay to lose if I have to lose it, and what percentage I want to keep for my retirement, and what percentage I want to keep for some fun stuff. So that's what I did. And then I thought, okay, actually, what really motivates me? What am I passionate about? And the answer to that for me was I'm really passionate about companies that are bringing innovation and companies that are bringing change in the world we live in. So if I'm going to put money in certain companies, I really want to do it with companies that I believe in, and I believe in their mission. So I started putting some money in certain stocks, and at that time I had about 35 to 40 stocks in my portfolio. And then I had my second lesson, which is the emotional roller coaster lesson, when the markets are volatile and prices go up and down. And I thought, my God, I have to be up until 10:30, 11, 1 a.m. looking at the stocks in New York and having the emotional stress. And so I thought, okay, actually what I should do is to reduce my number of stocks and keep the companies that I'm super passionate about. So that actually, if I have to spend my Friday night going online and listening to YouTube interviews of the CEO, looking at the financial reports of that company, I'm having fun. This is something that I really, really love doing because I'm passionate about those companies. So I reduced the number of stocks in my portfolio to keep good enough to have a diversified exposure, but to have companies that I really believe in, so that if the stock price slumps by 10% in one day, actually I'm not emotional about it, because I'm very clear that I know this company is solid, and that in 1 year or 5 years from today, the price will be better than it is today. So I think that just my last lesson before I get it back to you, Yvonne, is don't try to time the market. Honestly speaking, as retail investors, we don't have the luxury of timing the market. So so just believe in the companies, spend time researching, and enter when you feel like it is right. And if you make some mistakes, just don't be too hard on yourself. Honestly speaking, it's the tuition fees, I call this. And when you start investing, you'll make some mistakes, and just take it as a tuition fee for schooling.
Yeah, thanks so much, William. Definitely, there's ups and downs in investing, and I really like how you address the sort of emotional aspect of investing. Another question for you, William, is how did you choose how to invest? I mean, did you go with a traditional wealth management firm or an online brokerage where you do everything yourself? And which one did you choose, and why?
Yes, actually, I chose two stock brokerage accounts. So I have Futu and I have SoFi personally. I thought it's actually good to test out two different opportunities. So obviously you try the features, and you can see which one you like best and which one you find frustrating perhaps. So I think it's good to try two in the beginning, so at least you can see which one you like best. Make a decision out of this. I keep both, and I do trading. So I do the New York trading on SoFi, and personally I do my Hong Kong trading on Futu.
Yeah, that's great, diversifying your online brokerages. For me personally, I have Futu, SoFi, and Interactive Brokers. So actually that segues well into our next speaker and question. Mikaal, as a director at SoFi, could you explain to us, what exactly are the differences first between a traditional wealth management firm and an online brokerage, and yeah, what we should know about the differences between these two?
Yeah, so I think first and foremost, when we look at investing, we can start with some of the problems I think that young investors face before they make that decision. And it typically revolves around products being too complex, and often they're made complicated by design. They're expensive to transact. And also the minimums are often very high, right? The average person in their 20s or even 30s doesn't have $50,000 or $100,000 to invest. So when we think about traditional wealth management versus online, I think what online effectively does, or the solution it brings, is democratizing access to investing. And it isn't to say that traditional wealth managers and banks don't have their place, but they tend to focus on an older customer who has already accumulated assets and wealth and wants to sort of put that to work. So at SoFi, for example, 85% of our customers are in their 20s and 30s. So it's a very young customer profile relative to most brokers and wealth managers in Hong Kong. And I think the next thing is it's important for investors to really understand themselves. So I think I loved William's introduction. It was great, and I think it was spot on. Sort of concur with everything he said. And I think it's important that you understand yourself. And what I mean by that is when you invest, you should understand your time horizon. So are you a long-term investor, or are you going to be trading frequently? You also need to understand your risk tolerance. So are you conservative, or on the other end of the spectrum, are you aggressive? And I think once you sort of come to those conclusions and get comfortable with that profile, that can then set the direction for which someone invests to begin with. So if you're self-directed, you want to do your own stock trading, you can absolutely do that. If you're what we would call a more passive investor, you want to be hands-off and sort of put your investments in cruise control, there are products called a robo-advisor where you can invest a recurring investment into a diversified portfolio of exchange traded funds, and that's more like a set it and forget it type product. So I think the spectrum is served now.
Yeah, thank you, Mikaal. That's very useful. I guess with online brokerages, they're really heating up, and a lot of new or novice investors, especially young people, like you mentioned, are flocking to online brokerages like SoFi. But could you let us know, some of the risks that we should be aware of when using an online brokerage, and what sort of investor protections you have?
Yeah, absolutely. So there has been absolutely an uptick in individual investors coming into the market over the course of the last 4 or 5 months. Even year over year, our business has grown about 4x across all of our transactions and turnover and that sort of thing. And really at this stage, we're typically doing between $1 billion to $2 billion US in transaction volume per month through the mobile app. So it has been a big sort of spike in participation. To some extent, it worries me because I'm old enough to remember the .com crash. I was at E-Trade at the time. And often when people get too enthusiastic and piling into the market, people need to be careful. My advice is invest for the long term, take a longer term horizon, as per William suggested, invest in companies you know and understand. I think that's important and that you're passionate about. And that you can invest in it and be comfortable that you're going to hold it for a year, 2 or 3 years, and you'll probably see appreciation. Hopefully, you'll see appreciation. But what's happening today is a lot of day trading. People are just coming in, actively trading. You start with GameStop, AMC. People are just speculating, and I think that is dangerous. So while for business, the more transaction volume we do, it's a good thing. But personally, I would tell investors, slow down, invest for the long term, and don't get too enthusiastic because these things tend to end badly.
Mm-hmm. And as William mentioned, he's tried out different platforms as well as myself. I'm not sure if you can answer this question, Mikaal, but perhaps would you be able to let us know, what are the sort of differences and benefits between SoFi and these other competitors out there like Futu, Robinhood, and IBKR?
Absolutely. I mean, first of all, I think each of the brokers is serving a specific market, and our approach has just been to achieve 3 things: simplicity, affordability, and speed. So those are really the goals. And as a result, I think it's sort of conducive with us attracting a younger client base. I think at the other end of the spectrum, you have Futu, an interactive broker, which absolutely serves another type of customer segment, usually someone who has more experience. They're more advanced traders. They use charting and streaming data, almost to the point of being semi-professional. So I think there's again a spectrum of customers. I think we are more conducive to someone who may be new to investing, younger customers coming in. And then as you gain more experience and you need more tools, you may evolve to an interactive broker down the road because it serves you better. So I think in summary, that's the big difference.
Yeah, thank you so much, Mikaal, for that overview of online brokerages. I'd like to move on to a different topic now, very exciting topic. As you guys may know, cryptocurrencies, well, Bitcoin reached a record high in 2020. And Jackie, I'd just love to ask you, could you explain to us, novice investors, what exactly are cryptocurrencies and, what is the difference between a Bitcoin and other cryptocurrencies?
Sure, yeah, of course. So I just want to start off by saying that I am not a technical analyst of cryptos or an expert trader by any means, but I have worked at Diginex for the last 2.5 years. So I've learned a lot about the asset class. I touch cryptos in some way, shape, or form every day. So I really understand the benefits and the risks and the uses. Plus, I am an enthusiast and an investor myself. So I feel like I can speak to this, especially in a simplified way. So crypto, from a technology standpoint, it's a medium of exchange, which is created and stored on blockchain technology. So unlike traditional or fiat currencies, cryptocurrencies are not backed by a central bank or a commodity, and they have no physical form. But what's cool about cryptocurrencies is that they transact almost instantaneously over this blockchain technology, so there's no real time delay. And another thing that's cool is that they're transparent, so all the users of the blockchain can see all the transactions. And I just think cryptos are super exciting right now. Like you mentioned, prices that are at an all-time high. It's a new asset class, and there's really nothing like it out there. And what I love about cryptos right now and generally is that they're inclusive. So you don't need, just because they're at an all-time high price, you don't need to buy one whole Bitcoin. You can buy an eighth and different fractional denominations. So it makes it really inclusive for all types of investors to kind of dip your toe in the water and diversify in this way. And so for Bitcoin, Bitcoin was the first cryptocurrency. It has the highest market cap right now, and probably will for the long haul. And people are coining it right now as digital gold. And so like gold, Bitcoin is a scarce asset. So there will only be 21 million Bitcoins created. So that, coupled with this new mainstream institutional adoption, has really pushed the price up. So right now, I think it's trading around 60,000 for one, which is huge. And then the difference between Bitcoin and other cryptos. So again, from a technology standpoint, other cryptos transact on other types of blockchains. And then some cryptos have a utility, some are coined as stable coin, which means they'll follow currencies that are more traditional. But I think the one I'll touch on is Ether. So that's the second largest cryptocurrency right there in terms of market cap. And it's also at record highs, trading around 2,000 per one Ether. And I personally invest in both Bitcoin and Ether.
While crypto is definitely, an exciting asset class right now, I really have to ask you, Jackie, again about the risks, because definitely with any sort of investing, there are risks. So could you address this in the context of investing in crypto?
Sure. So I think first, maybe I'll touch on how to invest, and then judging by how to invest, I think that brings along some inherent risks, which I'll also share. So I think the best way to invest right now as a retail user is joining a trading platform. So the trading platform can be a digital asset exchange. Some big ones, well, a big one that's also publicly listing is Coinbase. And then there's Equos, which is Diginex owned. And I would just be careful and do research on what trading platform you onboard with. So you want to make sure the platform is reputable, it has really strict compliance and security measures, and hopefully it's regulated. So if you're publicly listed, you're inherently regulated. And then you can deposit typically fiat or traditional currencies onto the exchange. Some exchanges even allow you to do this via credit card, which is pretty cool. And then you can start trading. Some exchanges, you don't need crypto to buy crypto. So you can use kind of the funds you already have in your bank account. to start trading. And I would say start small. So to echo William and Mikaal, I mean, I personally am very conservative. I'm a controller, so that's part of my job. And I would say start small, especially as a new investor, and just assess your risk appetite and how much you are willing to lose if you were to lose it. And then, so this is a good segue, I guess, to your question about risks. So 3 main risks to be aware of are hacking, price volatility, and kind of your personal security measures or your key to your wallet of cryptocurrency. So in terms of hacking, I'm sure people have seen in the news that some exchanges have been hacked in the past. So that means that someone will come on and basically steal all the assets off the platform. And if your assets are on that platform, there's a chance that you'll never see them again. So that's why I stress to find a reputable exchange, a regulated one, and this should hopefully ease concerns and ease that burden. And the second risk is price volatility. So like I mentioned, unlike traditional currencies, cryptos aren't backed by a central bank. So they're subject to fluctuations in either direction, fluctuations up or down, and there's no central governing body to correct it. So again, like I mentioned, if you assess your risk appetite and you're not an aggressive investor, I would say start small and be conservative, and just keep in mind that the price amazingly could go up, but at the same time, and the same metrics could go down. And the third risk is your private key. So if you take your cryptos off exchange, you have to hold them somewhere. So you hold them in a digital asset wallet. And your wallet will have what's called a private key, which is a random string of letters and numbers that you need to access your assets. And there's been so many stories, and it does unfortunately happen all the time, where people lose this key or misplace it or forget it. It's your passwords, but there's no central body to click forget password. No one will tell you what your key is. So just keep in mind, as much as you want an exchange to be secure, you should always just keep your security settings on high as well.
Thanks so much, Jackie. Definitely, we should remember our passwords. That's a good tip. Before we open the floor to Q&A, I know you guys must have some burning questions. I'd actually like to address some sort of hot topics in the market right now with you guys. I guess one topic is, the rise of ESG and climate issues. A lot of investors, particularly young investors, are really concerned about, their portfolio's impact on the environment. My first question is open to anyone. How can we make sure that our investment portfolio, is sustainable, climate friendly, and ethical?
Yeah, maybe I can go first, and thank you, Yvonne, for this question. I think it's a very great question and something that we hear about in the news all the time. I think there's not a day that go by without seeing some articles about ESG related products. And this is something actually at CFA Institute, as a global non-for-profit, we're tackling. We're working to develop a standard reporting for ESG related product. So to your question, Yvonne, I think climate is very important, and it is probably the most important human crisis we're going to face in our generation. So it is something to take on very seriously. But ESG has also other letters, so it's the social, and that's something to look into the companies, what they do for labor standards or data protection. That's very important. And the G is their governance, which is their board of directors governance and their whistleblower policies, and then compensation philosophy. These are very important things to look at. And going back to what I said in the beginning, that's why you have to choose companies that you're quite passionate about, so that you really enjoy reading about their policies and their structure and what they do as an organization to impact the world they live in. So we hear a lot about different companies selling ESG funds or ESG products, and we have to be very careful of greenwashing. So greenwashing means you're actually selling something to be ESG friendly, but actually it isn't. And so if you have watched the documentary Seaspiracy that is currently available on Netflix, you will know what I'm talking about. You have some labels and some statements being made by a company that they are usually, but it's actually lots of lies. And so that's why you have to go behind the labels and behind what you see perhaps in some of the reports that the company does to see whether or not this is actually true. I think you have to go back to your personal values. So for me personally, I would exclude investing in any company that I believe will be in oil and gas, for example, or that will be not having good enough labor standards. So that's something to really think about. Yeah, I think the recommendation is, again, spend a lot of time reading on the companies and be passionate about them, so you can create your own critical thinking skills of that company and decide for yourself whether or not this is something that sticks with your values. But be careful of greenwashing and watch the documentary Seaspiracy.
Yeah, that's a great documentary, and definitely it really pays to do our research. Yeah, would anyone else like to address this topic?
Yeah,
if not,
sure.
Yeah.
Just quickly, there's a lot of press around the amount of electricity that mining for cryptocurrencies consumes. So mining is the process of essentially creating a cryptocurrency using high performance computers. And the numbers are true, so it does take a lot of electricity to do this. However, a lot of the mining operations use renewable sources of energy, which is not so much in the press. But I know that a lot of mining operations use hydropower or solar power. So these kind of orphan types of energy sources that would otherwise go unused. So from that sense, it kind of lowers the carbon footprint a bit.
Mm-hmm. I guess moving on to our next question, another hot topic is really, sort of the rise of IPOs. I think the Hong Kong Stock Exchange had a stellar Q1 this year already, and we've seen a lot of IPOs of food delivery services like DoorDash just in December last year raised a crazy amount of money. Deliveroo just debuted today, also, but not so great. Could you, any of the panelists, tell us a bit about investors who want to get into IPOs? What are the fundamentals that we should be aware of, etc.?
Yeah, I can maybe begin. It is a very hot topic. And I think that not only in Hong Kong, but in the US as well, it's been very active. And maybe it's a bit counterintuitive, just sort of the way the sort of economy is going and everything else. But so many companies are going public. So my advice personally would be, you don't necessarily have to get into an IPO day one. I would just let the stock kind of settle down, because typically what happens is an enormous amount of volatility when a company goes public. And the reason for that is the market or investors are trying to decide what is the value of this stock. So my advice would be just let it cool down, let those sort of initial days of volatility happen. And again, I know I drone on about this, but again, I would really just suggest buying into companies that you're happy to hold for the long term, and not necessarily doing it in a speculative way.
Any thoughts on the Deliveroo IPO today? I think the stock just dropped 30%.
And it's same for Baidu, quite a drop. I think I echo what Michael says. I think you hear a lot of stories of people saying, "Oh, I made so much money on the IPO," and back in the days you had people borrowing money so they can subscribe to more slots. And I think what many retail investors make as a mistake is that they hear stories from their friends that they made money, but your friends don't tell you when they lose money. They tell you when they make the gains, but they hide the information when they're losing money. So people remember, oh, wow, actually my friends are making money with IPO, I should do that too. And that's the whole behavioral science behind investing. And I agree with Michael, is that actually IPOs, there's a lot of success stories, there's a lot of downside too. And as we see with Deliveroo and Baidu, the price has dropped actually. So imagine if someone had borrowed money, the emotional roller coaster they would have gone through, at least for a few weeks. So I think in that sense, yeah, be critical about what you're choosing to invest, and perhaps, yeah, as Michael said, let the market dictate for a while if you are not certain.
And I guess moving into perhaps a more technical topic, the rise of SPACs. You know, Asia is set to see, I think Hong Kong is set to see its first SPAC listing this year. Singapore and Indonesia are also looking into it. So I guess I'd like to know, you know, what will the allowal of SPACs in Asia mean for retail investors like us? And again, what are the risks and challenges associated with that?
Sure, I'll take this one actually. So Diginex was actually acquired by a SPAC back in September, and that's how Diginex went public on NASDAQ. So I do have a lot of experience with SPACs, mostly from a reporting side, but from an investing standpoint, I think there's probably one major difference. So if you're investing in a company that's listed or just listed, you're investing in that company, you believe in their strategy, they have a track record, and you kind of know what you'll get. When you invest in a SPAC, you're essentially investing in the SPAC's management team. So I like to think of a SPAC more as a public private equity vehicle. And so what happens is when you invest in a SPAC, the SPAC has a mandate and a time frame, usually 18 months, to acquire a company. And that mandate could be in a certain sector. So if you're investing in a SPAC, you are confident that the management team will find an acquisition that is intriguing to you and will be part of your investment strategy. And if you don't want to invest in the company they acquire, you can get out of the SPAC. You can take your money out and you could still get some benefits. So I know the investors of the SPAC that acquired us still retained rights and warrants afterwards. I think for Asia investors, this is a great opportunity as a new investment for those who are looking for something new and to diversify. I also think we'll see in the Asia markets a lot of movement from acquisitions and more liquidity, which would be interesting.
I would just add something just very quickly to that. I think SPACs are a really interesting vehicle, and I think they're innovative and they're solving a problem. But I think one thing investors need to be a little bit wary of is that SPACs typically don't go through the same level of due diligence that a typical IPO would. So at a typical IPO, you have a number of investment banks that are, you know, working with investors and trying to set a price, and it tends to be a more thorough and longer process. Whereas SPACs, because they're ultimately acquisitions of a company, don't necessarily have that same degree of rigor. So I think comparatively, one has to think, okay, there's a slightly higher risk profile with a SPAC versus a more traditional IPO. So I would just, you know, throw that out there to consider.
Yeah, I think this webinar is a great first step to investing and understanding, you know, the fundamentals and the risks and the challenges that come with it. But obviously, it's a very time-consuming endeavor, as well as can be quite complex. So, do you panelists have any, you know, tips or advice for, you know, novice investors who want to get into the markets in terms of learning resources like courses, books, etc., or anything like that?
If I could say a quick word, I think that I like what William said at the beginning, in that it really is an education. I am of the belief that anybody can be an investor if, as you say, they put in the time to research and understand what kind of investor they are. I think a really interesting innovation that has come now is fractional shares. So in summary, it allows individual investors to buy a small slice of stock. So you can now buy, for example, $10 of Amazon Whereas before it could cost thousands of dollars. So if I wanted a portfolio of Amazon, Tesla, Apple, Google, Microsoft, it's going to cost over $5,000–6,000 US, and that's just simply not affordable. And that is also an expensive education, or has the potential to be an expensive education. So what I like about fractional shares, and we actually launched them today at SoFi Hong Kong, is just the idea that, you know, I can start really small. And as William said, let me have this education, give yourself some room to make mistakes and sort of understand yourself. But now you don't have as much on the line. You can literally own a diversified portfolio for $100 if you want to. So I think that that's a good innovation and something people should consider when they're starting out.
Yeah, I can go second. I think my advice would be to really think about what you're passionate about again, and look into different vehicles. I think for beginners, one of the interesting vehicles is exchange traded funds, so ETFs. I think that's a very good way to have access to funds that are actively managed. And basically what you're doing is you're entrusting a team of investment professionals who that's their full-time job to actively manage a fund, and you can just sit back and relax and give their trust and hopefully have some returns in that spirit. So for me, in the innovation and disruptive space, some of the active funds that I look at is ARK, ARK. So the ARK Invest, and the CEO and founder, Catherine Woods, is one of the top superstar at the moment as we speak. But I'm someone who believes in her philosophy, and I agree with the way she sees the world will change. And in that spirit, then I'm willing to put money behind that. And I trust that she has a team of professionals who will do most of the hard work in terms of decision-making process. So in that sense, I think we have great, we have the accessibility of those products, and it's just amazing. It used to be so complicated, and now you can just open an account and put money behind that and sit back. So that would be my best advice.
And from me, I think I would say start as early as you can. So your capital will only grow, hopefully, but most likely it will grow. So start as early as you can, and I think Mikaal and William both gave some great tips on how you can start small early and small now. So in terms of learning, I would say if you're interested in cryptocurrencies specifically, there's a great blog that I like called Bits on Blocks, and it really simplifies basically everything I talked about today and more. And then if you continue to do your research, I would recommend reading the Bitcoin white paper. That's kind of where all the fundamentals of cryptocurrencies in general, as well as Bitcoin, were created.
The final question on my end, before we open the floor to Q&A from our patient participants, I guess any final tips or advice you would give to novice investors?
I think we covered it all.
Great. So that leaves more time for the open Q&A. So we actually have quite a few coming in already. For the first question, I think this is great. What is something you wish someone had told you when you first started investing?
For me, it would be buy and hold. I began investing, I think when I was about 21 or 22, and investing, relatively small. But I was just obsessed with my portfolio, checking on it every 5 minutes, staying up late at night. So I think William can sort of attest to that. But where I really just got more comfortable was this advice of just, buy and hold. And although it's very traditional, I love Warren Buffett's advice. And when he says invest in things you understand, invest in companies where you really understand their products and services. And I think if you do that, you have a much higher degree of success than investing in things that just, may be a black box, but it's a hot topic, so everybody's piling in. So I think those are probably the two pieces of advice that I wish I'd known earlier.
And I think for me, what William said before kind of rang true. Having savings is amazing, but holding it in a savings account really doesn't get you really anywhere, especially with the interest nowadays. So like I mentioned before, I think start early and do your research and kind of try to invest in things you're passionate about.
Mm-hmm. Absolutely. Because when you're, I think, yeah, for me, that's really what it is. Invest in what you're passionate about, as Jackie said, because it makes it fun. Actually, at the end of the day, you should do something that you have fun in. And if it's just bringing you stress, then that's not great. Life is heavy enough, and the world is heavy enough in 2020 and 2021. So you should have fun into this. And if you don't, then think about different companies. And if you really don't like it, then try to go see a professional. You can have some wealth managers who can help you in this journey as well, depending on how much money you want to put behind. But I think there are just so many solutions now, and there's so many new companies that are bringing value to young professionals like us who do not perhaps have millions of dollars to put behind. We're not going to have a family office. So try to see for different solutions that bring you fun at the end of the day and not too much stress. And yeah, as Michael says, don't look at it every day. Just don't. It's not fun.
Another great question from the floor is, what is the minimum amount you would recommend for new investors?
So from my perspective, I think you can start with a little, very little. Again, whether you're investing in a robo-advisor that manages your portfolio for you, or you want to manage your own portfolio yourself, just start small. You have time, go through that process of learning. Again, today with $100, you can build out a sort of a full portfolio and just learn from that. And as you get more comfortable, you can begin investing more. But I think everyone should have a good balance between savings, holding cash, and investment, with a view that investing is just simply, riskier, and it's good to have that diversification of some savings and cash on hand and some investing, and the balance between that really comes down to the individual. But yeah, that's what I would recommend.
Yeah, I think the minimum to open a stock brokerage account at most of the platforms is about 10,000 Hong Kong dollar as we speak, and that's not the companies. That it's a regulation from the SFC. So actually, if you have $10,000, you can open a stock brokerage account, and if you have more or less money, you can look at different platforms too. I think there's really no minimum. It's just a matter of what's your savings plan and what's your investment plan. And so you can start small, have some fun, make your mistakes, win some money, lose some money. And then once you feel more comfortable and you have spent time to do your homeworks on the companies you want to research, then you can lock more money depending on your disposable income that you have. But I would say that really have a plan, because otherwise you just will have money everywhere, and you will have stuff that happens in your life, and you're like, oh, I have to sell some stocks in order to pay for that. And it's maybe that's what you want to do, but maybe not. So just have a plan so that you say, okay, I'm saving that much money every month. I'll keep a certain percentage in cash, and I will invest that portion. And out of that portion, you will make your allocation on risky, non-risky, and different asset classes. And so that you can really plan your life. So don't go in this without a plan, please. It's just like, it will add so much frustrations and emotional roller coaster to yourself. So just have a plan and take it from there. Once you feel more comfortable, you put some more money, or if you have a promotion.
So once you have a plan and you've done this research and you really begin to start investing in stocks, great question from Asim. When you buy and hold, how do you know when is the right time to sell? Is there a specific thing you look out for, like a percentage of a profit, or do you set a goal?
So I would say that my recommendation would be to have absolutely a target price, whether that's for selling or for buying. You should have a target price, and that will reduce your emotional baggage, and you will not be a victim of the price volatility. Because it always happens when you don't plan. What happens is that the price goes up, you're super happy, then next week it goes down, you're starting to be a little bit nervous, then it goes down again, then you're panicking, and then it goes down more. You're like, okay, do I wait for this to go up again and break even, or do I just sell? And then if it goes down more, then you're like, okay, I need to stop the bleeding, I'm just gonna sell. And then in, I don't know, next month, you look at it again just by curiosity and you're like, oh my God, it went up again. What have I done? So it's going to be very frustrating if you don't have a plan. So you should say, okay, I'm going to buy this stock at $5 and I'm going to sell if it goes at $6.50. And I'm going to hold, anyway, you just plan accordingly, but stick to your plan and have no regrets, because really, there's nobody with a crystal ball. So if you sell at $6 and it goes to $7, you'll say, "Oh my God, I should have kept it." And likewise, if you do the opposite, you'll be very frustrated. So just have a plan. So it's very clear in your head. There's no emotion. It's a very rational decision. And don't be so hard on yourself if you have made some mistakes. It's part of life.
So we've been talking a lot about stocks, but Sean would like to know, are stocks useful for long-term investments, or what other sort of portfolio mix or assets would you suggest for the long term?
So I would, and maybe I'll pass off to Jackie with respect to, cryptocurrency as an emerging and new asset class. But speaking specifically to stocks, yes, I think they're a long-term investment vehicle. Absolutely. What I like about stocks, again, is you're investing in, companies. And if you have a belief that Amazon is going to be a bigger business in 10 years than it is today, or Google or Apple, then invest in it, and you'll probably do very well over the long term. So yes, I think stocks are an excellent vehicle, especially if you're willing to hold them for the long term. If it's more short term and you have some degree of risk and worry, then as William said before, exchange traded funds are a great vehicle. You can invest in different indexes. So I might invest in the S&P 500, right? I just don't feel comfortable necessarily picking individual stocks. I just want to trend with the overall market. And so you have the ability to buy an index of the S&P 500 or the NASDAQ or emerging markets, whatever you're interested in. So yes, I think stocks and ETFs long-term, absolutely.
I personally think from a crypto perspective, these can also be held as long-term assets. I know a bunch of companies now are starting to accept payments in Bitcoin and maybe some other cryptos. But I think at this time, I personally believe that it's all right to hold them for the long term, as well as a hedge against some other investments that you might have or other currencies. And yeah, I think that cryptos can add certainly to a diversified portfolio.
And a question from Pete, NFTs, non-fungible tokens. Is this viable or a fad as an investment option?
I definitely think it's a space to watch. I think it is very interesting, but my personal advice would be to understand the crypto market first, to understand blockchain and the technology, and kind of, although it's not really basics, it's probably more useful at this time to understand that before you then go and invest in NFTs.
I really like how we've discussed all sorts of different asset classes. Another great question here is, do you panelists have a ratio suggestion for a balanced medium risk portfolio? For example, cash versus commodity or crypto versus stocks.
I would say I think there's people out there much smarter than me, and I think there's some really interesting tools out there that new investors can use to define that. Again, I'll go back to this sort of concept of a robo-advisor. What it essentially does is it's accounting for your age, it's accounting for your goals, it's accounting for your risk profile. It will ask you 5, 6, 7 questions to assess your risk appetite, and it's taking all those factors into consideration. And an algorithm is then presenting you with the ideal portfolio based on the output from that. So what I would suggest is maybe try a robo-advisor. I think that process is really useful. It'll really help you sort of understand what kind of investor you are. And to answer your question, the output of that will show you specifically how much cash, how much in emerging markets, how much in stocks, how much in bonds. I think it's really interesting.
Yeah, and that really wraps it up on our end. I'd really, first of all, like to thank all the panelists, Jackie, Mikaal, William. Thank you so much for sharing your insights. It was definitely really helpful. I personally learned a lot, and we hope all of you participants learned a lot as well and feel more confident navigating the investment landscape moving forward. Also, just a note that we have recorded this webinar, so no worries if you missed a section or didn't manage to take some notes. We'll be sending a recording as well as some key takeaways from this session. Also, this event was organized by the Young Professionals Committee at the Chamber of Commerce here in Hong Kong. We do some really great events, workshops, networking, a lot of which are online, as you see. We previously did another financial series for young professionals on different topics like MPFs and ETFs. So please feel free to give your feedback after the session to any of us here. If there are questions we didn't touch upon that you would like to discuss next time, or different ideas for events and seminars that we can hold that can really help you. So just to close, thank you again, and feel free to reach out to any of us, and yeah, have a good night before the long weekend.
Thank you, Yvonne.
Yeah, I just want to say a quick thank you again, and thank you to everyone who attended the event. Just letting you know, the Young Professional Committee, we are going to continue on an investment topic. So if there's something you want to know, please let us know. And also, I think as young professionals, our topic always is to MBA or to not to MBA. And so we're actually going to be planning an event in two months to talk about that. And I hope to see you all there. Thank you, everyone. And this is the point where we would have a toast, but here's a virtual toast to everyone. Have a good night and see you soon. Thank you.